Welcome back to the Making Sense of Money podcast presented to you by P1FCU, where we tackle all the financial topics that matter the most to you. I'm your host, Tanis, and on today's episode, we are going to be discussing a huge financial milestone, purchasing your first home. For many, this can seem like a very overwhelming process, but don't worry, we're here to help. And here with me, I have our very own VP of Mortgage Lending, Wes Gossage.
Thanks for having me.
Yes, thank you for being here.
No problem.
This is like a dreaded topic for most first-time home buyers. I mean, you're either eager to learn or you are like, no thanks.
Found out something you didn't want to know.
Exactly. Before I start asking you a bunch of questions, can you give us a little bit of feedback on your background and how you got started in the mortgage world?
How far back you want me to go?
Go all the way back.
Oh, geez. We don't have that much time. So let's see. So I'm a graduate of the U of I, and I got a business finance degree.
Awesome.
And I really love the area. So I wanted to stay here. So it's not like there's gobs of finance positions out there. So I ended up getting into consumer lending out of college, and I worked my way up started actually at a finance company, and then I got into banking and was just a loan officer, and an opportunity came up about to get into mortgage. I was thinking business lending, but I thought, what the heck, I'll try it. And just loved it ever since I got into it. And I've done it now for like 25 years.
So you're our guy. You're the right guy.
I'm your guy, I guess.
Well, if you could give somebody, some input on just starting out, it's exciting, but it's nerve-wracking. And where do they start when someone wants to first buy a home? Where do they start?
I think you can't learn enough. I think you can't ask enough questions. Getting a mortgage and that kind of a commitment is a big decision. What do they say? Hopefully you only get married once, but you're probably going to buy multiple houses.
Right.
And you learn each time. There's so much to understand. If they've gotten any kind of loans, a student loan, a personal loan, a car loan, it probably wasn't that tough. And you go to get a mortgage, and we literally ask you for a lot of stuff.
It's quite the
transaction.
transaction.
And I think it's pretty overwhelming to people. They don't understand the why. Why do you need so much information on my down payment? Why do you need so much information on my assets?
Right.
And that's because there's a burden on us as a lender to make sure if we're going to put you in this loan that you can repay it. So I think that's the biggest thing that people are shocked by is what it takes to get a mortgage.
Absolutely. And all that really goes into that. I mean, like you said, buying a car, in the mortgage world, that would be a simple transaction versus, the underwriting between the two look totally different too. And not only as a lender, as an institution, do we want to make sure we're following all these guidelines, but we're obligated to follow those guidelines. And they're a lot different than on the consumer side of things.
For sure.
That can be hard for people to understand, I'm sure, too. So you kind of mentioned, like, if someone has purchased a car or has some other loans, like, clearly they need to have good financial habits, be able to make their payments on time, understand where their credit's at. What else would you say would contribute to this process as far as financial habits?
Great question. So I think it would start with, first I would talk about employment history and stability. If you go in and get a car and you're at a dealership, they ask a little information from you. It's really how good your credit, does it look like it makes sense?
Right.
Car loan's pretty quick and easy. On our side, we want to see consistency of employment. Have you been in the same job? For how long have you been in that job? If you've changed jobs, is it in the same industry, same line of work? Because that can affect what we qualify you for, or how long you need to be in that job for us to do it. A home, again, is a big commitment. What you have to put down for a down payment can be sizable, and thinking about where you're going to get it.
Right.
So that's big. And then credit. Credit's always important. How you manage your finances will have a huge impact on the types of loans, programs, maybe interest rates, lots of things for you. So lots of things there that are different from a consumer lending. It's easy to get approved for a $1,000 credit card. There's not a lot of risk for a lender, but you want a $300,000 mortgage, you want to make sure you can pay it back.
Absolutely. What's one unexpected expense or cost that you think that catches first-time home buyers off guard?
I would say the thing now that's come about just recently is commissions. For years and years and years, it's always been a burden that the seller took on. Now there's been some rule changes there, and I'm not a realtor, but from the transactions we see, a realtor talks to you, they're going to go show you houses, and they explain how they're going to get paid. And most of the time they want to negotiate that for the seller to pay. But we have seen a few now where buyers are having to pay some commissions. Well, that's different because as a lender, I'm usually only talking to you about down payment, closing costs, your first year's insurance premium. But now all of a sudden, if I've got to say, well, and you're going to also need a few extra $1,000 for commissions, that's on top of it. So that's something. I think the other thing that they don't think about would be maybe inspection costs. Let's say you're buying a property, it's got a well. Well, you probably want a water quality test. Maybe you want to have a flow test to really find out how good that well is.
Sure.
A lot of people don't think about that.
Which appraisal and inspection, two different things, right?
Exactly.
Okay. And is an inspection required for?
Not for all kinds of things. So if an appraiser goes out, it has a well, they turn on the spigot, water seems good, maybe take a swig of water, they think it looks okay. But a well is more than that. It can be how long can you consistently let that water run before the well won't do it. So you may want to check more into that water supply than an appraiser will.
It seems
That's
like that would
just
be
an
like
example.
best practice.
That's something crazy we don't think about septic systems. How old is that septic system? I mean, if somebody's lived there for 30 years and they bought it new and now they're selling it to you,
Not something you
you
probably
might
wanna
be
get.
putting in a
Yeah.
new septic system someday. So
Yikes.
I think that would be the expenses is what do I got to get inspected so I can learn as much as I can about a property to make sure I want to buy it.
Yeah. That makes total sense. And I remember being a first-time home buyer and then being shocked at, what do you mean I don't just have to come with my down payment? You know, thinking about the closing costs and prepaids, that stuff is something that you don't typically, if you don't understand, then you don't know. You're not expecting that. So that was shocking to me, which helped when, you know, I had mortgage experience, being able to say this is also what to expect because that's our job. That's, you know, as a lender, we're obligated to let them know this is what you're going to have to come here with and be prepared for.
And explain what all those things are.
Exactly.
Because that's the thing is that you get that piece of paper and whoa, what is all this?
Right. But that's the name of the game. It's expensive. That's for sure. Well, now the fun part, since we've been talking about all the fees and the things that could go wrong, people probably look on Zillow before they should, right?
I don't know if it's before they should, but that tells me they're starting to get interested. They're starting to get excited. I know what you're saying, though, that, yeah, I can look on Zillow and see a house and go, wow, I want that house.
Right.
Got a pool, got a big shop, got all kinds of nice things. But then I see the price tag and how do I get myself brought back to reality of what I can afford?
Right. So it wouldn't be a smart thing to do until we, you know, talk to a lender and get a pre-approval.
I think trying to temper your excitement with, again, this goes back to learning as much as you can. You know, you and your spouse are thinking, hey, it's time for our first home. Go find out. Like we said, let's learn as much as we can. Come in, talk to a loan officer, learn what it's going to take for down payments, learn what kind of options you have so that then you've got a better understanding of, okay,
is this possible?
Not only is it possible, but maybe the payment you really want to commit to will give you a range. Maybe it's whatever, $350 to $400. And now you can kind of zero in and quit looking at $2 million homes.
Right. Totally. How about red flags to look for when they're looking at homes, either online or in person?
Again, it's houses. I kind of like to compare them to like car buying a little bit.
Yeah.
A used car versus a new car. If that car's been sitting on the lot a long time, why?
Right.
If I go look at it and maybe I'm not real sharp about when things might need to be replaced, have somebody else look at it with you. Maybe that's your dad. Maybe that's your mom. Maybe that's a good friend. Maybe that's someone else. Inspectors. But a lot of times I think the emotional excitement of the home will make them gloss by things that they'll not realize they're taking on the responsibility of, that when I buy that home, Okay, I do a 30-year mortgage, but maybe the roof's only got a 5-year life expectancy. Well,
Right.
am I going to plan for that?
Right.
I buy that home. I know I can paint it, but do I want to replumb it?
Right.
Two different things. And
Right.
what's that going to cost? So
Right.
I think this just goes back to asking questions, learn as much as you can, and understanding why. And if you do want to take on a house that might have projects, make sure you feel like you know what it's going to cost you, and you can get those things done.
Right. So just planning accordingly and being financially smart about it. It's a big deal. What about the final stretch, closing? What tips do you have for first-time home buyers during that process?
Yeah, there's several, I would say. Don't change your job.
Yeah.
You want to keep things consistent. You shouldn't, as you go into the buying process, you shouldn't be looking to be changing car loans,
Right.
getting other debt. Don't go get a furniture loan before you close on the house, because if you
Right.
don't get the house, what are you going to do with the furniture?
Right.
You just want to keep things like they are, consistent, and no big changes is what I'd recommend. Because if you do, it's great that you get offered a promotion, but if it changes things, you want to talk to your lender.
Got it. And that's because at the final stage, things are reevaluated. Got it.
Yeah, so we get you approved, and it's moving forward. And like we were talking about, if you come in and I get you, so to speak, pre-qualified to buy a home, and then you go looking for 4 months, and during that time frame, you go get another car loan, and it's added to your debt load. That could change what you qualify for.
Got it.
You go from hourly to commission in an employment scenario. That will change things. So they're going to look at it not just today, but before we close your loan. Things have still got to be in line.
Another thing you don't think about. And that's why I think this is so important for first-time home buyers, because there's so much to this process, start to finish, that, you guys, you do that every day. So you see that every day. But as consumers, it's like, okay, wait a minute, what? What are the rules? No, that's great. That's really good stuff, though. I do have one question for you, one last question. And it's a question we ask all of our guests here.
Okay.
And that is, what is one thing you wish you would have known about money earlier in life?
I think what you want to set for contingency or your emergency fund reserve, you have to be realistic about that and know that it'll change over time. And I think in the beginning, we always talk about people maybe having 1 or 2 months of reserves, that going to home ownership and being a responsible, borrower and all that, it's going to be more than that. The reason why I say that is I can remember when I bought my very first home, first summer, air conditioning went out.
Of course.
Well, I had enough to get into that home and a little bit of money, but was I
Right.
planning on $2,000 for an air conditioner?
Right.
I remember replacing a dishwasher. Well, I didn't think about a dishwasher. So those are things that you do. So what I thought was enough of a budget before I bought a home versus after I got into a home for a slush fund, I think really changes. You want to have more reserves.
Got it. Well, great. Thank you so much for all your input and your expertise around this very intimidating topic. But I think our listeners got some good stuff today.
Awesome.
Thank you
I
so
enjoyed
much.
it.
Thank you.
Thank you.
And thank you, everybody, for tuning in. We hope you learned something new today and you feel one step closer to making sense of money. Don't forget to check out our newsletter and subscribe at p1fcu.org. We'll see you next time.